Money day, guys and girls. I hope you lot are blessed. Now, it's been a very, very good week. Reason being, the boys won today. North London derby. London is red. I repeat, London is red. Now, with that being said, I know I've been gone for quite some time, but I finally got myself up and going, so I'm ready to upload a ton of content. Now, with that being said, we are going to review the trades that took place last week. So if you're very new to this channel, all I'm going to be doing is showing you guys the trades that I took and also providing the methods behind them. So once you guys can have a bit more understanding, then hopefully you guys will see the value in clicking the link in the bio and taking advantage of accessing my free Telegram channel where you guys can get the trades too. Now, with no further ado, we are going to get into this. Okay, so the first thing I'm going to do is walk you guys through my analysis for taking the Euro AUD trade. Now, there's two trades that I sent out. One was inside the VIP group on Tuesday, I believe, and the second one I think was on Thursday, but we'll double check as I go into this chart. Now, the reason why I want to show you guys the ultimate setup, the complete setup, is just so that you guys can, of course, put together your confluences and match them up with mine. And if you guys don't understand what I'm looking at or how I'm finding these things, and all that simply says, guys, is by clicking the link in my bio, you guys are going to get access to my free trades, but also you'll get access to messaging me directly, which is where you guys can also inquire about booking in a free one-to-one session with me so that I can show you what I do, how I do it, but most importantly, how it can benefit you. So with Euro AUD, naturally, I always want to check the daily time frames with any currency pair. Any instrument you're trading, guys, always check the higher time frame. Higher time frame is king. Higher time frame is king. So that's one thing you could take from today's video, is that higher time frames are king. So with that being said, I had noticed, of course, that we did have a high, or we failed to make a new high, and then we came down and made a new low. So from once we had this swing high to once we had this new low, we then had a valid swing high and a swing low. So very simply, guys, I took out the Fibonacci and I said anywhere in between the 62 and the 88%, which is this gray highlighted area, I would be taking trades. This is my kill zone. This is simply me being a sniper, waiting for my target to come into range. And of course, once I have a clear shot, I'll be executing the trade. So essentially, we had price pull up into the 62%, up into the 70%, and in some cases, we even had price push up even higher to the 79%. Now, essentially, the 62% is the Fibonacci, which is 61.9. But when it comes to the reason why I've got 62% is just simply because if it hits 62, then it's definitely hit 61.9. Okay. Now, some of these entries were taken on a smaller time frame, so it means that, you know, even though price is pushed up, some trades I may have lost, some trades I may have won. But ultimately, if you're taking a trade off of a daily time frame, you need to manage your trade on a daily time frame. So unfortunately, for all of these moves here, they weren't quite ready yet for us to make a new low and come down towards the minus 14.6%, which would be my first take profit target. This does mean, guys, that we are looking more towards a swing trade. So you have to understand, if you're taking a trade off of a daily time frame, this could take multiple days. I mean, if we look from over here, when price started descending on the 14th of November, it then eventually by the 3rd of January, so over 2 months, it then, you know, made a new low before it started to retrace back higher. So we have to understand that the higher the time frame, the longer the trade's going to take to play out. Okay, so essentially price started pushing back up, and I actually noticed that price was pushing up. Now, I was in between two, and that was simply because price had failed to make a new low. So I thought, okay, what's happening? Is price trying to push higher and maybe clear this high? Or are we just consolidating right now? So when price came down, you know, I looked at the charts and I said, okay, maybe I've missed this entry. And then I set an alert for around about here, and the alert went off one day, and I saw price was pushing right back up into my area, which I call the kill zone. So, you know, the best entry would have been 70% in this case, because we could see. But essentially what happened was I didn't take the trade. This was around the time when there was a lot of floods taking place in Dubai. So you guys have probably seen all over social media that, you know, it wasn't a good time for people that lived here. So based off of that being said, I missed the entry. But what I'll show you guys as we go into a smaller time frame is just that when I actually had a look at this trade and I saw what price was doing, when I saw this wick rejection, I pretty much kind of said to myself, Cavell, even though you've missed your prime entry, if price can pull back, then you should definitely contemplate getting into the trade. So with that being said, guys, we actually took an entry off of this bearish candle here, which is a 4-hour candle. So I'm going to go down into the hourly time frame and I'm going to show you guys. Okay, now I had to move this across because I was doing a video previously, but the entry was actually round about here. Now I'm going to show you guys, of course, the stop loss was 35 pips. When it comes to Forex, I always have a 35 pip SL. So after the price had pushed up and then price started coming down, I was pretty much in the mind frame of the fact that prices failed to make a new high, even though, you know, we could call this a high on an hourly time frame, but it did seem to me on the 4-hour time frame that pullback was in light of the news that we saw take place, but it actually just pulled back up to fill the imbalance and come down. Now, a lot of you may have heard the term imbalance before, some of you may have not. Some of you may have even heard the term referenced as the fair value gap. Okay, they're all the same thing. And all that simply means is when there's a gap created in the market, price will usually pull back up to fill this void, fill this area, and then price will continue onto the journey that it was once going. So with that being said, after we had that pullback and price started coming down, I did look at this on a smaller time frame and I sent this trade out inside my Telegram community, informing them that, look guys, we're going to take this entry round about here. This is the reason why I moved this, guys, because you can't see. We're going to take this entry round about here, okay? And this trade may take a number of days to play out. So I prepped the community, my VIP community, I prepped them in advance to let them know this may take some time. And of course, you know, if we entered this trade here on Tuesday, you can see here by Friday, so Tuesday, Wednesday, Thursday, Friday, it's a bit retarded, that's obviously 4 days, but by Friday you can see the trade had already hit our take profit 1 and our take profit 2, and I actually sent this trade out for free. And inside my VIP community I told them, hey guys, re-enter the trade, I'm adding more positions. If you missed the trade previously, now's a great time to get in. So we took this trade and price came down, and you can see here price came down, it reached our TP1 and 2 as well as our TP3. So I have told the community that I'm still keeping this trade open, and that's because if I go back to the higher time frame, as I told you guys, when you take a trade based off of a daily time frame, you need to manage your trade based off of a daily time frame. So in actual fact, you can see here, some of you may say this is a bit audacious from me, but you know, this trade should show us well over 350 pips, because really my first take profit target will be down here at the minus 14.6%. That's a 500 pip gain, ladies and gentlemen. That could be over 10, 20, maybe even 30%, depending on what lot size, depending on your account size and your risk to reward. This will be a huge opportunity for you guys to get involved in. So if you're not already inside my Telegram, you guys want to be inside of here, because if we can get a pullback, I am going to be informing you guys of further re-entries. But just to reel back into the daily aspect of things, because the daily situation was for me to take a short, I need to wait for the daily picture to play out. And at the moment, it's in the process. It looks great, okay, but things have not yet been completed. So I'm still waiting for further take profit levels to be reached. And of course, with that being said, guys, we can never go broke taking profits, okay? A wise man once said, profits are a lot better than wages. And that is really, really important. I think Warren Buffett said that. If it's not Warren Buffett, please comment below, let me know. If it's not Warren Buffett, it could be Zig Ziglar. It was someone significant said that. And it was really important, because you have to understand, guys, when you can place a trade once, leave it for a few days, 4 days, and then you can make, you know, in some cases, I've got members that have made over £800 with this one trade. That could be someone's monthly wage. That could be half of someone's monthly wage. That could go towards your bills, towards a holiday, towards further investments. So it's really important to understand that time is more important than price. We're not always going to find grand opportunities like this, okay? From when price pushed back down, you have to understand, guys, if we think about here, which is Thursday the 4th of April, we had to then wait for the 16th of April. That's 12 days 12 days, 2 trading weeks. Okay, we had to wait over 2 trading weeks just to be back in a position where we can contemplate taking a trade. So you have to understand, trades don't always come about, or the best trades don't always come about. Now, there may be a lot of you who are on a smaller time frame, you scalp and you like to get into small entries and trade for 20 pips. That's great. Okay, I'm not going to take credit away from anyone's unique trading style. But what I would say is, when we can understand what's happening with interest rates, when we can understand what's happening with the monetary policy and anything economically, we can then have an advantage on understanding the direction of certain coins, certain currencies. So the euro, of course, they had their interest rate taking place not last week, the week before. So we kind of understood they was on a downward spiral. And by understanding that, it led us to be able to take in this opportunity, because the fundamental aspect actually lined up with what our technicals were showing us, which was that Euro AUD was inside of a sell area, and that gave us a permission to take the trade. Now, I don't want to spend too much time on Euro AUD. We're already 10 minutes into this video, so please already, if you've made it this far, smash that like button, subscribe if you haven't already, and comment below. Let me know if you took this trade, if this was something you was looking at. Let me know what pairs you generally trade, and I'll try to give you guys further, deeper analysis on those pairs. Now, I want to show you guys gold. Gold is something that I've stayed away from for quite some time, and that's only really because gold has really been bullish. Now, if you guys can remember, on my previous video, I did explain that the central banks were buying gold. Okay, they came out and made it very open that they are buying gold. So that would actually cross-reference the manipulation we're seeing in the market, because historically, when the DXY goes up, gold would come down, and when USD JPY would go up, gold should also and would also come down. But that has not been the case of late. That's not been what we've been seeing, and because of that, it leads to a lot of mass manipulation, a lot of mistakes that people can make in the markets due to them relying on the external factors that they've used in the past, which is the fact that the DXY is pushing up, why is gold not coming down? So because we understood, again, from a fundamental perspective, okay, that the markets were being held up by central bankers, we could now start to understand, actually, rather than us just looking for a sell because the DXY is strong, we need to understand a bit more here that gold's got a reason to stay up, especially regarding what's happening in the world. It's historically proven when economies are perceived to be uncertain, or when economies perform poorly, commodities do very well. And due to the conflicts that we've seen across the world, you know, we've had the Middle East involved with conflict with Israel, and of course that has led to gold being a safe haven for investors right now. So we managed to take a buy on gold, and I can show you guys this buy setup. So this buy setup was based off of the fact that if I go on the 4-hour time frame, I'm going to show you guys from the daily. That's where I should show you guys from. So off of the daily time frame, guys, I noticed that we had a pullback. Price filled the rest of the imbalance that was left inside of here on the smaller time frames. As you can see, I've got a box here which highlights my imbalance. Price pulled into what I call a daily lit block. You guys may have heard of this before, referenced as an order block. Okay, price pulled into this candle and it reacted. Now this wick was the indication that price was reacting from this candle, but I wasn't yet convinced. Why? Because gold has been so bullish, I've really been reluctant to trade it. But after I saw the second day, okay, and the second day failed to push further down into this wick, I then believed that we could then get a response, and so we did. Okay, so it led me to being more interested now at looking at the smaller time frames, and when I saw what I saw on a 6-hour time frame is actually a bullish reversal formation here. Okay, I saw this formation, which again I showed you guys, and I told you guys about the imbalance, aka the fair value gap that was filled. Okay, so this area was filled, price reacted beautifully off of this candle, and then after that price started pushing up. But again, what we can clearly see is there was a bit of consolidation, price started moving sideways, and quite simply, guys, you have to understand, some days are going to be great to trade gold, some days are going to be terrible. So we pretty much waited until Friday morning, into London session, into the London Open, we was trading gold, and as we approached the New York session, that's when gold really did take off and it hit our take profits 1 and 2. Now, We traded this on Thursday as well as Friday, I believe, because Friday price had pushed up and come down. Now, for my free community, I gave this trade out. It hit take profits 1 and 2. For my VIP community, I told these guys, look, have an extra trade open, leave this open, let's see where this can go. So I'm actually going to go down and not waste any more time. I'm going to go down to the 15-minute time frame, and I'm going to show you guys something very easy to look for. Okay, now one thing that we really want to do when we establish a new low, okay, we can see here price made a new low down here, then it pushed up. Okay, if I go from this low, okay, to this high up here, I'm going to go from this low to this high. We can see that over here, okay, let's turn this off. We can see that over here price in and around this area here, price fails to come down towards our kill zone. Okay, some people take trades off of 50%. I don't. That means I might miss a lot of opportunities, but it also means that when I do get the opportunities, I tend to be a bit more profitable, okay, than those who would take their trades off of 50%. So we continue to extend the fib, and we can see that eventually when price does come down, what do we get, ladies and gentlemen? What do we get? We get that sweet spot, 70% sniper entry. Price flies away from there, and where's our first take profit target? From once we see price react from this area, our first take profit target should be where? Pause the video, you answer the question. The first take profit target should be, as I mentioned to you guys before, the 14.6%, minus 14.6% on our fib. And what we can see here, guys, is when price pushes up and it comes back down, this further pullback, okay, is not where I would be extending the fib from, because we haven't now made a new high yet. So in actual fact, we don't extend any fib, we keep things exactly how they are. And what we do is we wait. Now, at this moment in time, this was on Thursday, 4:15 a.m. That would be 7:15 a.m. Dubai time. Okay, I missed the entry, right? But we can see eventually when price did pull back, I was quite interested. Now, some can argue that price did clear the high. Okay, it took out the liquidity in this area, so that led to a pullback. But for those of you who are a bit more advanced into trading, you guys can also understand that the smaller the time frame we're on, the more opportunities we can find. And with that being said, okay, we can actually take into consideration a swing. We can take into consideration another swing if we didn't actually catch this entry. And when we take that into consideration, guys, I'm just going to remove this temporarily. What do we see? We see another 70% kill spot, G spot, sweet spot. We see another 70% entry, okay? This 70% entry does what for us? It gives us another entry into gold. Price this time is now ready to move, and what does it do? Within a few candles, price rockets all the way up, and it hits our take profit 1 and also our take profit 2. Now, with that being said, okay, we do have to take into, let's bring that position back up. Cool. With that being said, we do take into consideration the fact that when the markets are moving, sometimes you guys may not catch the right entries, which means your stop losses have to be a bit wider. But what I want to highlight for you guys is key components to look out for, okay? Whenever you see what I call a down candle, okay? Whenever you see the opposite candle inside of a mix, okay? For instance, this candle here, it's in between two green candles, aka bullish candles. When you see a candle like this, this represents an order. This represents where price was once or will again in the future buy from or sell from in certain instances, but because this is a bearish candle, this is a buying candle. So when price comes back down, there isn't any imbalance on this time frame that price needs to fill. In fact, there is, we can see it in here. But ultimately, we want to see what price does inside of this bearish candle. And what price does is it reacts accordingly. Okay, it also matches up with our 70%. And we also understood the structure has changed from bearish to bullish. So therefore, we've now got three confirmations as to why we would take this buy. Bearing in mind, we would have already taken this buy from the 70%. So at this point, when we're adding this entry, we're not doubting the trade because we're already in this trade. We're just understanding that this is a re-entry for price to continue pushing higher. Change the screen. That was an accident, guys. So with that being said, as I go back to it now, it's important to understand that patience is the only way we're going to be profitable in this market, guys. If you guys have had a great week, amazing, pat yourself on the back. But as you approach the new week, forget about the last week, because it's very important to understand, if you just made, I don't know, thousands, if not hundreds of thousands or hundreds, of pounds or dollars, whatever it may be, in a day, working your 9 to 5, would you then go to the casino the following day and put that money, every penny that you made, would you then put that on black or red? You probably wouldn't. And if you would, you're crazy. Okay. So what I'm saying is, if you wouldn't risk all the money you just worked hard for to gain, then why on earth would you risk all of the profits you've just made to throw it back into the market? It's not worth it, guys. This game that we're in is a marathon. It is not a sprint. This game we're in is not for us to put ourselves in a position where we're up for today and we're down for the rest of the month. This game is actually to think about the percentage. When you go to the bank, they offer you a percentage return. They don't say, Mr. Jones, we'll give you back £5 for every £100. They just say, we'll give you 0.5%. So it's important to understand that when you're in winning opportunities, or when you're in winning trades, I should say, to not get distracted, or to not get overconfident, overzealous in adding entries, or feeling like you've missed out, so you want to add into it, you want to jump into a moving train. It's suicide. You would never go to the train station, see the train leaving the station, and decide to jump on the back of it. You'd never do that. So, and I hope you wouldn't. So if you wouldn't do that, guys, we have to understand that patience is key. So when gold finally left the station, we can see we had take profits 1 reached, and we also had take profits 2 reached. Now, my TP1 and TP2 was actually different for the community. It was this one here, and it was this one here. Okay, for my VIP community, of course, we can see here we was able to catch over 360 pips with this trade. So this was quite a nice move. Okay, it was a very nice move. And I would, if it wasn't Friday, I would have told the community to hold the trade, because based off of the daily time frame, I think we can continue pushing higher to fill some of the imbalance. But with gold, you never know. It's never worth staying in a trade just because of how the markets are moving, or just because you're in profit. When it comes to gold, you could get a crazy gap down. When the markets are shut for us, institutions are still allowed to buy. So with that being said, it means that really and truly all that's happening is, over the weekend, we're just out of the action, but action is still there is action still taking place. We just don't have the accessibility to it. So with that being said, I just want to show you guys what is going to be on the cards for next week. Now, the Japanese yen released their interest rate last week, and we saw the Japanese yen tank. So I do want to cover that, but I will cover that in the Market Monday episode, so stay tuned for that. But what I want to look at is what's taking place this week. Now, this week we can see we've got the CPI for the euro, we've got GDP for Germany, we've also got PMI for the dollar. And as we approach Wednesday, we've got a bank holiday for most countries inside of Europe, including South Africa and Mexico. But then we've also got, of course, because it is going to be, we are approaching May. Okay, on Wednesday it will be the 1st of May, and then we will have ADP, and that is, of course, in light of NFP, which takes place on Friday. But before that, we do have the Fed speaking. Now, the Federal Reserve will be releasing their interest rate, which is going to be very, very interesting. Now, usually the interest rate can have a huge impact on the markets, but what usually has a further impact is the press conference. It's actually Jerome Powell stepping up, speaking, and actually explaining what his thought process is for the interest rate, where it is at the moment, and what their plans are. They have spoken widely about trying to reduce interest rates. Of course, whether that happens or not, time will tell. But we do need to see what's happening, because inflation has been an ongoing problem for quite some time. So as we approach Thursday, we've got jobless claims, which usually does provide some type of fluctuations in the market. And like I said to you guys, on Friday, we've got NFP, but we've also got the unemployment rate, which is also going to be big as well. Now, because there's so much US dollar news taking place midweek, I suspect the markets will probably be quite slow leading up to that. So, don't expect too much. Don't get yourselves in a muddle, you know, in too many trades, hoping that price is going to reach a take profit targets. I think we could just be waiting until NFP, if I'm honest with you, until Friday. You know, it's a new month. Usually, as we approach a new month, the markets are quite slow. So we do have to be very patient with this. Now, I want to make it very clear to you guys, if you're new to trading the news is not for you. Okay, but if you are new to trading, you should definitely be monitoring how the news impacts the markets. How the news has an impact on your technical analysis is very important, because if you can read information which is public, all of this information regarding interest rates, regarding where we've been in the past, where we potentially may be going, all of that information is free, it's online. So if you can read that information and grasp a bias, and then compare that with your technical analysis, if they both match up, that's going to give you the ultimate confidence to believe in your setup. And that is why I believe, guys, the fundamental combined with technical analysis is very important. There is no point you just only knowing how to read a chart but not understand what's going on in the world. If anything, understanding what's going on in the world is more important than just reading a chart. So with that being said, I do want to show you guys just very briefly what's important here when it comes to looking at interest rates. As I've clicked onto it, you can see it does briefly mention what the interest rate means. Federal Open Market Committee, which stands for the FOMC, members vote on where to set the interest rate. Now, this takes place every single month, if you're not already aware of this. Okay, now if I wanted to find out things about the markets concerning the interest rate, I could read some of these news articles. I could read some of these blogs from analysts. Okay, gold's long-term bullish trend still intact despite recent pullback. Stagflation ahead. Fed faces tightrope walk as inflation persists. Growth slips. Okay, there are so much different articles that we could read to have a further analysis or a further understanding on what's happening, and that is the financial markets, guys. It is not just trading gold or trading Bitcoin or trading US30 or trading, you know, GBP USD. It's understanding what's happening in the world and what effects that has on the markets. So if you guys are wanting to learn more about how you can impact your finances by understanding the financial markets, then all you'll need to do is click the link in my bio, where I'm going to enable you guys to book a free one-on-one consultation with myself, where I will give you a strategy for free which you guys can use. You can go away with it and you can pretty much make it your own. Okay, but if you're someone that's needing further education, further mentoring, then of course that's the reason why the one-to-one call is going to be there, so that we can further discuss how we can help you become a more profitable, consistent trader. Now, I know this video has been quite a long one, but I have been gone for some time, so I thought I would hit you guys with a double wham bam boogie and give you guys the unforeseen amount of value. Now, those are my setups that I took this week, so it wasn't many, okay? I took multiple entries on Euro AUD and gold. That was it. Now, I want to give a massive shout out to some of the traders who made an unseen amount of profit, okay? I want to give a shout out to Bods, who made over £4,500 trading from the VIP room. I want to give a shout out to Max. I want to give a shout out to Gift. Gift made £800 trading Euro AED and £500 trading gold. I want to give a shout out to RS. I want to give a shout out to, I don't know all your names. I'm just thinking about the names I saw in the message. But yeah, to anyone who's made money inside of the channels, a massive congratulations for you guys. And I really want to tell you guys that now is the time to really lock in, okay? Traditionally, April, June, May, when we approach the summer, there tends to be some really big moves in the markets. We either get all-time highs or all-time lows. So this really could be interesting over the next coming weeks. So be sure to be inside my Telegram, because that's at least the foundation you need to excel your trading to the next level. And of course, if you haven't already, smash that like button. Smash the like button, subscribe, you know the vibes. It's lit side. Thank you guys. I've been your host. You've been learning with Vel. I look forward to seeing you guys in the next one. Money day.